Hi traders, you're welcome back to the Forex Geek channel and you are welcome to this video. So if you are looking to take your swing trading to the next level, you are in the right place, okay? In this video, we are going to be diving into the best stochastic settings for swing trading that can help you make more informed trading decisions, all right? So make sure to stick around and let's get started. First of all, let us add the stochastic oscillator to the chart, and then let us talk about what the stochastic oscillator is and why it's essential for traders. So the stochastic oscillator is a momentum indicator that compares a particular closing price of a security to a range of its prices over a specific period. This tool helps traders identify overbought or oversold conditions in the market, which can signify potential reversal points. Okay, simply put, when the stochastic rating is above 80, the assets may be overbought, and when it's below 20, the assets may be oversold. So understanding these conditions is crucial for swing trading, since it helps us spot potential entry and exit points. All right, now that we understand the basics, let's get into the nitty-gritty of the best stochastic settings for swing trading. Now, the default settings for the stochastic is usually I want to adjust this. Let's reset this. Okay, so we can see that the default settings for the stochastic, as we have here, is the 5 for the percentage K, the 3 for the percentage D, and the 3 for the slowing. Okay, but did you know that tweaking these settings can significantly impact your trading strategy? Because when you modify these values, it can affect the rate at which the stochastic oscillators respond to price changes. Okay, so for swing traders, I recommend adjusting the percentage K to the 9 period. This makes the indicator more responsive to recent price movements, which is vital in capturing short-term trends. Okay, additionally, keeping the percentage D at 3 can help smooth out the signals. But remember, the best settings can vary depending on the market you are trading in. So it's essential to backtest these configurations before going live. Okay, now let's discuss how to combine the stochastic oscillator with other indicators to confirm your signals. Many traders make the mistake of relying solely on one indicator. By integrating the stochastic oscillator with a trend indicator like the moving average, just like we have here, you can filter out false signals and enhance your decision making process. For instance, if the stochastic shows overbought conditions but the price is still above a moving average, like what we see here, you can see at this point stochastic was already saying overbought, but here we had the price of the asset still above the moving average. It may not be the right time to sell at this point. Okay, on the other hand, if both indicators align, like at this point now, the stochastic was very close to the overbought. In fact, it was just almost touching the 80 level and then began to point downwards, and the price cut below the moving average. So at this point, it's a good place to enter a sell. Okay, let us look at some other examples. So let's just look briefly at some examples. Okay, now we can see that at this point, the stochastic oscillator was in the overbought territory and it was pointing downwards, cutting below the 80 level, and then the price of the assets also dropped below the moving average. So that would have been a good place to enter a sell. Okay, it would have been a good place to enter a sell. And then you can set your stop loss just right above the swing high, and your take profits can be when the stochastic is in the oversold territory and pointing upwards. Okay, however, the moving average should also be used to confirm the exit, because you might end up leaving a lot of money on the table if you just used only the stochastic to determine your exit. Imagine if we had exited around here. Imagine entering around here and exiting around here. You would have just caught about 74 pips when we would have made over 500 pips. So when the stochastic gives you an exit signal, try to confirm the signal with the moving average as well. So we would have exited around here after the price of the asset cut above the moving average. Okay, all right, so that would have been a good place to exit. Okay, and there you have it. The best stochastic settings for swing trading, in my opinion, is 9 for the percentage K, 3 for slowing, and 3 for the percentage D period. Okay, you can leave this price field at low high, you can leave the MA method at simple. All right, so that is it. If you found this video helpful, please give it a thumbs up and hit the subscribe button. Your support keeps us motivated to create more valuable content for you. If you have any questions or want to share your own experience with the stochastic oscillator, please drop a comment below and let's chat. Thanks for watching and happy trading.